Fed, the FOMC, right, which is not just one guy or gal, but it's, hundreds of very highly educated PhDs,
Right.
on paper, very, very smart, right? And they've been predicting those two things, GDP and inflation, for dozens and dozens of years, right? Here's the crazy stat. I mean, this is a crazy stat. They are over on those predictions.
Mark Yusko, the CEO and CIO of Morgan Creek Capital, provides his analysis of the financial markets following the U.S. Federal Reserve's implementation of a 25 basis point interest rate hike. He is betting big on Bitcoin. Although the apex cryptocurrency is still struggling to sustain momentum around the $30,000 price level, Yusko is bullish on Bitcoin. He predicts that the digital asset will tap $300,000 come 2028, right after the halving is successfully carried out. The latest increase in interest rates marks the 11th time the FOMC has taken such action since the tightening process commenced in March 2022. During this period, the committee opted to skip the June meeting to evaluate the effects of the previous rate hikes. Federal Reserve Chairman Jerome Powell has maintained his belief that inflation remains excessively high. In late June, he expressed expectations for further restriction on monetary policy, suggesting the likelihood of additional rate increases in the future. Fed economists are anticipating a difficult second half of the year for the U.S. economy. In June, Fed officials projected a median Fed funds rate of 5.6% in 2023 and indicated the FOMC will not pivot from rate hikes to rate cuts until 2024. The Labor Department recently reported the Fed is projecting a 2023 U.S. unemployment rate of 4.1%, which is higher than the 3.6% level. U.S. gross domestic product grew 2% in the first quarter, but the Fed projects full-year GDP growth of just 1% in 2023 and 1.1% in 2024. According to Mark Yusko, despite the expertise and intelligence of the individuals within the FOMC, they have consistently failed to accurately predict economic indicators such as GDP and inflation. Here are a few glimpses from the discussion that we'd like to show you. Before we proceed, make sure to subscribe to the channel and hit the bell icon for more updates.
Well, we all do this, right? When things are working, you say, oh, look how smart I am. And when they're not, you're like, oh, the market's broken. It's not that the market's broken. It's just we're in this phase. Look at M2. It's going up. And when M2 is going up, guess what happens? Stocks go up. The other thing that happens, look, Bitcoin goes up. Bitcoin's up this year a lot. Not because Bitcoin got better. One Bitcoin still one Bitcoin. What happened? The dollar got worse. The dollar got worse, right? I think this issue of timing is really important. And the only thing that matters in the system that we've created is the short term, right? It's the period, we'll call it 18 months of active duty, right? Where you're not fundraising for the next election and you're not, paying back the favors from the last election, where you actually have some work to do. And you're going to do everything you can as government officials to make sure that people feel good, right? That gasoline prices are low and that spending is high and that people feel comfortable borrowing. And you got to juice when you can juice. And even if you have to pay the piper long term, they're like, well, I don't care about the long term. I won't be here, right?
Stock futures rose slightly on Monday morning as the market is poised to wrap up the month of July with strong gains. Despite persistent inflation and rising interest rates, investors have piled into stocks and other risk assets so far in 2023 as concerns over a hard landing for the U.S. economy have dissipated. The S&P 500 is up 18.9% so far in 2023 and is only about 5.2% below its all-time high of around 4,800. Yusko emphasized that it was highly unlikely for anyone to have predicted the S&P 500 19% increase this year.
How much of the institutional capital on the street is going to have to flip bullish to chase this rally?
Again, really, really important question. And as you know, I think questions are way more important than the answers. So this is the question everybody should be asking. And again, anecdotal evidence says, yes, there is a chasing that occurs. Now normally it's late, like Q4, and that's part of the explanation of Santa Claus rallies, and also around the issue that mutual funds have to sell by October 31st, it's not December 31st, and so there is this downward pressure in mid-October, and then you get this 30 days later, to avoid the wash sale, you get this increase, and then you couple that with a chase year, and that's why you get these big blow off rallies sometimes in Q4. One of the things about summer, right, is people go away, like literally. I mean, you went away, I went away, people go away, and therefore less happens, volumes drop, and you've seen that in the stock market.
Yeah,
and you get prone to squeezes, and so the Nvidia thing happened, and I've seen it a couple times with other companies that quote unquote made earnings, which we'll talk about in a second. I'm like, no, you didn't make earnings. You told me you're going to make $1. Then you told me you're going to make 50 cents. Then you told me you're going to make a dime, and you made 11 cents, and you call it a beat. That's not a beat. I mean, you told me you were going to make $1 not that long ago. So, but the street thinks it's a beat, and because there's no one in their seats, you get a big squeeze, and they happen. So what I think is actually likely is, I think there has been chasing going on, just in terms of short covering. People have had to give in, and the number of liquidated shorts this year is an all-time record. It's never been higher. So all that quote unquote cash on the sidelines, I think a lot of it is back in the market already. And yet I do agree with you that there's going to be some people that wake up here and they look and they say, geez, I'm 500 basis points behind. And in the institutional world, 500 basis points is a massive hole, because no one said we were going to be up 19% in the S&P this year. Not anybody. And somebody says, I did. Okay, fine. Show me the one person who did.
I'm with you.
I don't think there are anybody.
Yeah.
So I am positive on your question that it could lead to chasing.
Yusko believes that the financial markets are still in a bull market, and he is bullish on Bitcoin and other cryptocurrencies. However, he also warned that investors should be prepared for volatility in the near term. The stock market's 2023 rally has endured despite a sharp decline in S&P 500 earnings growth. What is your stance on Mark Yusko's analysis? We encourage you to share your views in the comments section. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. Thanks for joining us.